Hey guys, NeoFX with Black Flag Trading. It's December 20th, 2017. It's about 1 p.m. Central Standard Time here in Texas. So I just wanted to go over really quick a very simple strategy that I use for myself and in my service at Black Flag Trading. So I want to show you guys how you can pretty easily, I know a lot of you guys like to scalp, but I'm telling you, it's a waste of time, in my opinion, when you can simply get in on these larger time frame swing trades and just kind of ride these more symmetrical swing moves that aim, 3 to 500 pips at least on the daily frame, the daily time frame. So here we go. So we're looking at the Euro New Zealand. Okay, so this is the daily chart. I expected the Euro New Zealand to top at this level anyway, just based on the completion of this. And we've been riding this thing up, I'm telling you, from probably end of September. I mean, this pair really moves. But this original ABCD on the daily, the Fibonacci extension was right at this level. I peeked through. I mean, it just kind of pierced through it a little bit, but it is starting to come back. So every time we have this doesn't mean that it's gonna reverse. Okay, long term, I think Euro New Zealand. I mean, I'm serious. I think we may get up to 188 or above. We're at 170 currently, but it's just time for a little pullback. Okay, on the smaller time frames, because every time you have a large A, B, C, D swing complete, that D target typically takes us back a little bit, and then we'll look for the next A, which starts at the previous C point. Remember, A, B, C, D. So A, B, the last D becomes the B, and we'll look for just support levels. And I have different ways to look for that. I do multiple Fibonacci extensions and retracements and see where they kind of line up, and also obviously just by looking at the chart, support and resistance levels. This is very strong support here and here and here. So resistance, support, resistance. So it could come back to 160. I mean, I doubt it. I think we're going to stop at around 163, 165. But for now, I think it's time for a little pullback. Okay. So how do we trade this? Well, very simple. So you do the same thing over and over again, guys. You want to draw your upward trend lines. Okay. So if you know how to draw them, this would be your upward trend line that essentially just got broken. Okay, so a very simple strategy. I've talked and untalked about this. You wait for a break, a solid break. Okay, we have not broken the last support. Okay, but just from experience, it likes to break this support line, this trend line, and then come back to the backside of that. Okay, now how do we trade this exactly? Well, we're in good territory now. I mean, I'm short as of, just a few minutes ago. So how do we trade this? Well, you want to trade this. We're in the 4-hour time frame now, chart. So look, you got to follow the Fibonacci swings. Okay, your first A, B, C 38% retracement, D extension got hit. You got to drag the Fibonacci tool down. And because we have a new down A, B, C, D move. So the last C, remember, A, B, C becomes a new A. The last D, the new B. And then we'll look for retracement. And we're at the 618, which is as ideal as you can have. You guys know that. So 618 retracement. We had essentially a rejection at this price. Okay. On the smaller time frame. So you guys, you have to know how to navigate from larger time frames to smaller time frames. Okay. So now where do we aim? Well, we should be aiming for at least the 127, which is 166, which is our first target. And eventually, let's call it 164.20 just to be safe. Okay. So this is the call. I just sent this out to my subscribers. And this may take, a week or so. I mean, it depends on what kind of news comes out. If news comes out that's favorable to the New Zealand and, or unfavorable to the euro, then this will get there so much faster. But it is a technical trade. We're not trading off the news. The news just kind of help prices get there faster. So we're gonna look for the first level is the 127 extension. Okay, it's got enough juice to come down to the 164, but I think the first target is safe for 166, so we're short at 170. So we're aiming for 170.18. So we're aiming for about 418 pips. Okay, and guys, with very very little risk. A lot of people say, well, where's your stop? Where's your stop? Listen, I've done this long enough to know whether I should have a stop or not. And there's times that you should, in volatile times with news coming out, and there's times where you shouldn't. Okay, you just don't need it. You can monitor this, because if I see some kind of price action that I don't like, I mean, I know to get out. Okay, a good trader will know as he watches a live market react at these pivot levels, he will know that whether or not the trade is valid or not, and you can get out manually. Okay, so keep an eye on it. You're just gonna check this, a day, once or twice a day, guys. That's it. This type of trading, this swing trading, larger time frames, really frees you guys up, and you aim at much larger pips amounts per trade. In November, we got in the gold membership 3,600 pips, guys. 3,600 pips, and we're currently up pretty good on pound yen, and the pound yen was just, I mean, just textbook. I'm expecting 1,000 pips on this. I put a video out, so I got in right at the back side of this broken trend line. We have a flag essentially. I mean, I expect 160, but 156 first. So 11th. Oh, this is from November. This this is the wrong call. But yeah, we're long the pound here. But anyway, so this is essentially how simple you can keep it. And believe it or not, earlier this month in December, I was actually long this pair. I thought this new high would have taken us higher, and then the reaction was just, I mean, we lost about 100 pips. But this is where it pays not to marry a trade. Okay, if price action tells you otherwise, okay, so this consolidation here told me that we're topping. Okay, because it's not supposed to go sideways this much. Okay, it's not. You usually want to get a pop at these Fibonacci levels. You want to get a pop, a solid pop with volume. Okay, here it just kind of went sideways and just rolled over. So we got out of that buy, and we're now short. So here we go. It's December 20th, 2017. We're shorting the Euro New Zealand at about 170. And we're going to be aiming for 166 for about 400 pips. So we'll keep an eye on this, and I'll keep you guys posted, and we'll see what happens. All right, thank you. All right, guys, so here's the follow-up to the Euro New Zealand short from a couple of weeks ago. It's January 9th, so obviously it's taken a little longer than expected. The thing is, we lost about a week in a double top. Okay, this is where we sold, if you remember, on 12/20, and then of course it was the holiday, so the volume was very low, but essentially we're at 166.40 currently from 170.18. Then I added almost another lot on this retest, and another beautiful way to confirm to yourself that is indeed that ABC top. Not only we had a double top at the backside of the broken trend line, like I told you. Okay, that was essentially the idea behind the short. But you also, on a smaller time frame, like this, you also draw those counter trend lines, and the moment that's broken, okay, it's a confirmation. That's why I added those additional 2 positions. So decent trade, not a bad trade. We're up almost 400 pips, 380 to be exact. So my target is 166. I'm gonna go ahead and take out the one original lot, and I'll leave the rest. Maybe I'll take it all out, because I do want to get into some Bitcoin. But so yeah, very solid trade, not bad, very clear. Daily cycle, guys, I'm telling you, these larger time frames are that much better, to trade off of. Okay, the noise that you have in the hourly or 15-minute or anything like that, it's just not worth your time. I'm telling you, it's not worth your time because you may be taken out uh, several times and have the price still be the same level exactly on a mean basis, on an average basis for a week or two, and you just ride and you just fighting that noise day to day, in and out. You're paying more commissions, you're spending more time on it. Whereas dailies, well, there you go. It took essentially 2.5 weeks, but that again, you got to take out the weekends and you got to consider the holiday trading, which was essentially very low volume. You guys know that not much happens during the holidays, but here we go. I mean, very solid. Euro New Zealand did turn over just like I thought. Our first target's about to be hit. I'm gonna take one out. Uh, let's take that out. Pound yen still going very strong, just like I expected, and yeah, yeah. I mean, gold rebounded, just like I thought. Silver rebounded. Here's gold. Okay, gold has had a massive last 3-4 weeks, and I think we're finally on its way up. But anyway, so here's a follow up on the Euro New Zealand, about 400 pips. Not a bad trade. So this is essentially how you want to trade these breaks of the trend line. Okay, very clear trend, uptrend. The moment it broke, you wait for a pullback to the back side of that broken trend line, and it got tested twice here with this double top, and ideally a Fibonacci level. Another thing you can do, because see, if you look at now the 21, I use a 21, 55, and an 89 typically, and they're exponential moving averages. So I don't rely on those too much because they're essentially lagging indicators. Okay, see here, the blue line, which is a shorter term, has not crossed yet. However, okay, this is where it pays to know your way around the different time frames. That's because it's lagging. In other words, it will eventually, once prices are further down, it will cross to the downside. But then at that point, you already missed it. That's why I don't rely on moving averages, but it does help, and I'll tell you how and why. If you go down to a smaller time frame, like a 4-hour chart, you see where it crossed. Okay, so if your bias on the daily or weekly is short at a certain pivot level, then you want to zoom in and go down to the smaller time frames. And if you're a trend trader, so to speak, if you look at moving averages, well, you want that crossover to happen on the smaller time frames. That way you can get in as early as possible. Because see, here it crossed over right about those levels where we double topped. But if you wait on the daily, I mean, you're shit out of luck because it's lagging. It happens afterwards. It takes a while to take its toll. Okay, moving averages are lagging indicators. So predictive trading can only be done by following structure. In other words, candlestick formations, trend lines, and breaks with trend lines and Fibonacci's. Okay, and then you can use the rest to kind of confirm and help you, with further confirmation. But so 30-minute chart, for instance, if you're a trend trader, if you were trading these, if you were scalping and trading this downtrend, then yes, as long as the blue line and the red line are below this longer moving average, 89 EMA, then yes, you'll be short. And we will hit the 66. I mean, I'm leaving 40 pips on the table, but it's okay. I mean, I locked in about $2,700, plus I'm up another almost 2,000 on this other lot, which I'm about to take out as well. But so moving averages, guys, is secondary to my type of trading, but it does help. So if you like, for instance, if you zoom out on a weekly, then what you'll see, because they're lagging, okay, because we've been on a massive uptrend, those moving averages will be below market price because they're still lagging. In other words, so what this tells you is that eventually, as we make our way down from a smaller time frame perspective, okay, as we make our way down, we're bound to find support when you go to the weekly chart at these moving averages, okay, combined with Fibonacci's and everything else. So again, it's January 9th, guys. Here's your Euro New Zealand follow-up. All right, very good. Thank you.